Hey guys, a little bit of a different video. I just wanted to zoom out with the Nasdaq and the S&P 500. Look back quickly at 2008, just to see how were the charts back then. Was there an indication of a crash? And then now, where are we now? What could we expect in the upcoming weeks? And then maybe end of 2026 or later this year. So let's go. This is the Nasdaq chart in 2007, 2008. We had here a 5-wave move up, okay? You had your 5th wave done already. You took the wave 3 high here. You grinded higher. And then you started showing weakness here, okay? This move down was after a bearish divergence you had here. You had a week where you moved down very sharply. You want a 5th wave to end with bearish divergence, okay? We moved higher here. We created the 5th wave. We don't have bearish divergence from here to here, sadly, because that would be nice as well. But we have it inside this 5th wave. We have it here, okay? In the last leg up, could be a 1, 2, 3, 4, 5 then in some sort of ending diagonal or an extended wave 1. But yeah, we have to count it as diagonal because you have overlap here. But you see clearly higher high, new high, and then lower high on the RSI with a bearish divergence, which is a bearish divergence. And then the very red candle should be alarming, okay? Also, if you consider a 5-wave move up complete. Then what did we get? We got a 5-wave move down, after which we need a move up because you had a 5-wave move complete. We got a move up, again an opportunity to exit because we have to correct this in a wave 2. You can't have a 5-wave down in a wave 2. A 5-wave move can only be an A wave. So you need a B wave and a C wave. And that's exactly what we got. B wave and then 1, 2, 3, 4, 5 in a C wave. You tested to 0.618 and then the rest is history. Really very, very easy to read here, this Nasdaq chart. I went into the Microsoft chart. Let me just show you this one as well quickly. I went into some other charts as well, like Exxon, but you can see it in all of them. Nasdaq and the S&P 500 are well enough. But for Microsoft, we had here was 2007, 2008. So we had here an initial move down already in the early 2000s. Then from this low, you have a 3-wave move up. Already one warning sign. A road to all-time highs should have 5 waves, not 3 waves. So that's the first sign of, look, this might just be a part of a corrective rally. Then you move down, you hit the 886 here. From this low to this high, you hit the 886. To me, if you still want to count this as a wave 1 and as a wave 2, an 886 hit lowers the probabilities a lot for a wave 2. Then you get sideways price action. In a wave 3, you want to go up, not do this. So this to me indicates, look, we need to take this low, be careful. And then you make this high, you go back down, you can draw a point of control of this range. It probably sits somewhere here. You lose it and you crash. Very easy to see that coming on this chart as well, also on other charts. So if we go back to the Nasdaq then and look at the whole picture, you can see we are in a larger 1, 2, potentially a 3rd wave finished, 4, and then now in a 5th wave. This box here is taken from this whole wave 1 and wave 3 to wave 4, okay? And then I also have one. I should take one from here, but I think we have already met that target. Yeah, look, if I take it from here, we're already past it. So then we need to look at, we only have this box. Then we need to look at the internal structure of this fifth wave, okay? Also, we don't have bearish divergence here. I'm ignoring these because these played kind of out here with the correction we had in April with the tariffs. Now we have a higher high on the price and on the RSI compared to here. So still looks good. Then what was this correction? You can count this as a 1, 2, 1, 2, 3, 4, 5. And then maybe like another 4, 5 in here. A 5-wave move up. And then this was an ABC. Okay, we tested to 0.32. We didn't even go deep because a wave 2 could go even deeper. We rallied to the upside, and then yeah, we could see this as a 1, 2, 3. This now was a wave 4. Is a wave 4 still unfolding very nicely? We don't have bearish divergences here, so I don't expect us to go lower. This looks like a strong range here, what you want in a wave 4, and then this box here is taken from this wave 3 to this wave 4 for locally this fifth wave. Okay, so I assume we will get this push. It might go a little bit higher even as well, because this box is taken from the start of the wave 1 to the wave 3 high and then to the wave 4. So we might end up anywhere in between this. Okay, of course, once we get this internal fifth wave now, this could have been a wave 1 and a wave 2, and then this another one too. So we might now get a 3, 4, 5, 4, 5. Once we get this third wave, we want to see volume. We have that on the S&P 500 already better. More volume than here. Okay, that's good. And then we want to see, a 4 and a 5, and then maybe another 4, 5. But if we get the higher high with lower volume and with bearish divergence, then we should ring the alarm, okay? That we might correct this whole move because we would have a 5-wave move up. That is for this year, okay? Now, upcoming weeks I think will be good. Maybe end of the year we will have a correction. But then you can't count this as a 1, 2, 3, 4, 5 complete in here. I think this will turn out then to be another 1, 2. 1, 2, 1, 2, and then move higher, okay? But we will have 5 waves here, so we need to prepare for at least a local correction. Not a crash, I think. It doesn't seem that way. Also with now, the dollar was stronger this week again. If this can continue to push, we have a very good move down again. We didn't retrace all the way to the 886. This is comparing the euro to the US dollar, so this is the value of the euro. It's showing weakness, okay? If it's pushed here to the 886, I would say, okay, maybe we're gonna take the high one more time, but this looks good. 1, 2, 1, 2, 3, 4, 5, 4, 5 potentially. And of course, with the oil coming from Venezuela now, looks good for the dollar. So I don't think the economy is gonna collapse yet. Maybe someday. Same here then on the S&P 500 as I talked about the Nasdaq, looking like a 1, 2, 3. We had now this multi-month range starting in October, maybe even here September, all the way to last few weeks of December. We broke out here the week of 20 December. We backtested it the last week of December, and then we pushed now in the first week of 2026. To me, this is very strong. We have higher volume. RSI is pushing. I count this as a 1, 2 then inside this fifth wave. We still need this third wave to reach this box ideally. Then a wave 4, then a wave 5. And these two boxes here in white are measured for this wave 5. One is measured from here, one is measured from this whole move. So we'll have to see where we can go, but I think we will breach this one minimally. Then what I did is I added a point of control, this blue line at 6,800 approximately of this whole range. Losing this will be a first sign of weakness as well, okay? Maybe even getting back into this range is a sign of weakness as well. I'm gonna add this value area high here because we don't want to get back into this range if we want to move higher. Okay, so this sits at 6,874. We wick there. This is the candle where we backtested this range in my opinion. And then this is a very strong candle here. Very good volume. We might see continuation now. Ideally, we get that. Also earnings coming up end of January, February. This might boost the whole market again in this third wave, and still looks good. I don't think there is any alarming thing for something bigger to come yet. Once we get these 5 waves here, we need to be aware of correcting this whole move that started back in April. Thank you for watching, and I'll see you next time. Bye bye.